The largest stock market allocation ever recorded in history. Yes, guys, we are there. Everyone's piling in and the market has just closed at a historic high above 6,000. So what does the options flow, the huge dark pool liquidity that we're starting to see in some of the best stocks in the world, and of course, the US Treasuries tell us about what market's going to do next? Well, are we climbing the wall of worry? Sentiment reports show that some people are very concerned. Let's have a look at what's going on around the markets for the world as we break down stocks, commodities, and cryptos for the special weekend edition. This one's not to be missed. Let's get into the data right now together. Well, welcome back everybody to The Daily Show. My name's Tom, and in today's video, there is a lot to discuss. We'll be going through the macro, the data, the flows, and of course, the key technical levels throughout today's show. But I want to begin with just how bad semiconductors actually performed over the last week when you compare it to the rest of the market. As we've been saying for a while, mid caps and small caps have been where the flows have moved to. And it seems kind of like a 2021 period with really crypto and companies that don't necessarily make any money being the new favorite of Wall Street. Now, why could this be concerning? Well, let's take a look at household allocation to stocks. And you can see here a mind-blowing statistic that I posted over on our X channel, links in the description down below. A record high 41.8% allocation. The last time we were this high, 2021. What happened? We fell off. And of course, before that, well, you can see which other periods everybody was buying. Just before the global financial crisis, and of course, around the tech boom. Now, whenever retail does something this heavily, we need to be starting to pay attention. How far are we along? Could we see the markets go further before they fall? Do we need to be concerned of 2025? Well, as we've said for a while, we are absolutely on top of things for 2025, and we need to be looking at the key leading indicators, which we'll show some today in the video, to tell us whether markets are really concerned. But one thing's for sure right now, it seems like retail traders switched to being bearish last week. And this is statistically a terrible thing to do. If you're watching the channel, we've been sharing how Thanksgiving week itself is generally positive. The week after can be kind of negative, usually only 33% of the time up. That's the week we're going into. But have a look at this. Respondents said 38.6% over 6 months. They were bearish, less neutrality than normal, and 37.1% bullish. So this is one of the biggest switches we've seen. In fact, I think it was the biggest switch we've seen in something like 7 months. Now, why this is important is because it's showing us that we're climbing the wall of worry from the traditional retail analysts. That is usually you, me, and everybody else that we know. Now, why is that important? Well, the institutions and the bigger funds are really bullish. So this is a complete difference from what retail traders are doing and what the largest funds are doing. And remember, you want to follow the big money whenever possible. Now, there are some reasons why. If you have a look here, the spread between the 52-week highs and lows on the New York Stock Exchange surged to 14.9% last week. And this is only the 17th time since 1961 that we've ever seen this. Now, you may think, wow, that means the markets are too bullish. But actually, 88% of the time, the markets were bullish over the next 12 months. And this goes in line with a lot of the stats we've been talking about right now. Yes, we're in a period where it's pretty easy to be bullish. No, we probably wouldn't want to be bearish yet on the markets as we know people are getting slaughtered. But should we be cautious? Should we be coming in with a different mind frame into 2025? While everyone else is going on about how great markets are and how fantastic the economy is and everything else, should we be getting concerned? Well, the answer I think is probably yes. In fact, when we see reads that are this bullish, you can see consumer confidence is getting up there. Is this a sell signal? Well, not necessarily. In fact, if you actually looked at a 1 year later return whenever we go this high, it's a 50-50 coin flip. And we have a lot of bullish stats, but if you have a look here, the next 6 months, only 25% of the time was it actually bullish. And what that tells you is kind of what we've been talking about. We do expect a little bit of roughness in 2025 and probably at some point a negative 10% sell-off. Now, what's the reason? Well, there are always different reasons. Remember, if it's in the press, it's probably in the price, and therefore it's probably not something that you're seeing just yet. But there will be a concerning problem, and no doubt it's statistically going to happen. But that doesn't mean that we're going to be fearful into the end of the year. Remember, stats are totally different when you break it all down together. Some important things to note, though, when you're looking at these types of things is, yes, we have everybody piling into the markets. Yes, everybody's bullish. Yes, everyone's now going into crypto, which is always a sign of kind of that FOMO or risk-taking event. But you'll notice here that people are ignoring the uninversion of yields. Now, we shouldn't ignore uninversion of yields, but we should know that it just puts us on a timer. This could be 1 year away still. It could be 2 years away still. You've got to just keep in the back of your mind, it's a warning sign. It's an early warning sign from the bonds market. So do not lose sight of that. And we've talked about it a lot in 2024. Now, what about the street? Well, the street is thinking everything's fantastic. We've got 7,000 being called by Deutsche. We're being called by so many other big funds. Goldman Sachs is at like 6,800. There are so many different funds that are coming out and basically saying, we believe the market's going to make another 15 to 20% over the next year. And they may be correct, at least for now. Let's take a look at these stats here. According to Goldman Sachs equity report, Scott Rubner, he said that the flow of funds over the next couple of weeks will be very, very strong. So we obviously have talked about 6,200 being the possibility by the end of the year. And if you have a look where generally people actually make the most amount of money, a lot of the market has what's called the Christmas rally. So the Santa rally, which starts in kind of late December and then goes through the end of the start of the next year. Now, is that possible? Well, we just made a new all-time high, 52 all-time highs for 2024, putting us in some illustrious territory, but we've never actually stopped at 52. We've usually gone to the 53. In fact, it's a 96% probability that we have at least one more high in us during 2024. And while that may not be very helpful, it does show you how we need to think about markets. So could we be then saying, well, maybe there's going to be a fall sometime soon? Well, traditionally, no, not when you have every single thing basically being bullish. This is 8 bellwether market indicators, and they've all achieved new highs in the month of November. Now, this is not traditionally what you would see in a sick market. Flows are flowing, and they are going into the bullish side. And we know that the week after Thanksgiving, while it might not be statistically great, and that doesn't mean I would sell it, but obviously I'd be paying attention to it, only up 33.3% of the time, which is actually quite weak. By Thanksgiving to New Year's Eve, we generally see a 75% bull rate. And of course, that bull rate tends to be even better in, guess what? The small caps. So why is this all important? Well, it just means that you should be following the price action and not necessarily your opinions if you're thinking markets are bearish. Yes, allocation is at all-time highs. Yes, people are starting to feel a little bit of FOMO. But remember, it turns out that retail traders are still terrified. Otherwise, we wouldn't see sentiment reports coming in where it just has this huge amount of people turning bearish as we achieve all-time highs. Remember, when a market achieves an all-time high, it tends to usually go higher. That's what we just saw before when it comes to those stats. Now, which markets do we think are going well? Of course, we're using a bit of the 2016 election playbook. We talked about regional banks. We talked about energy a little bit. And of course, we've talked about materials and some of these metals starting to bottom off at this point. And along with that, small caps and mid caps. Now, one of the reasons is because we tend to see seasonal strength coming into December, January, February, into March of next year. And I think this will be an important factor. Let's say markets can hold through till March of 2025. Well, that's when I think you'll need to start really questioning a lot. Because as we saw before, the next 6-month stat, at least based on that confidence report, shows us that there is something lurking at some point. Because only, 25% of the times a market's actually bullish through that. So something weird may happen. Let's talk about cryptos. Are cryptos still looking good? Well, the answer is yes, we know, and we've been sharing this for a while. We know that when we closed September, we were bullish October, November, and December. So far, that's happening for Bitcoin. Obviously, we've seen the rally now from this point upwards of almost 100,000. And we know also that the alts tend to start up at around this time. December, January, February, March, April into May of next year tends to be the best period for things like Ethereum. And when Ethereum runs, that means usually the alt season has started. We've already seen some of these reactions over the last couple of days. And in fact, we've thought this for about a week and a half, 2 weeks. And some of the reasons were strong technical analysis. Well, it turns out that, of course, we saw flows. Tuesday and Wednesday, we had some massive flows into ETHU, which is the 2 times Ether fund. And while someone took a little bit of profit near the end there at the close, yeah, these are the biggest transactions ever recorded in that particular exchange traded fund. So it means that somebody has started to accumulate pretty large positions in the second largest coin. Now, MSTR hit the 20 daily moving average, found a little bit of support, and it is, of course, struggling because it's all about, the NAV premium and other things at the moment. But we noticed a little bit of a bounce, then it dropped down. This stock has too much interest in it. And whenever you have so much interest in something, it tends to usually underperform. Remember, it sold this much because people were having an aggressive attack on it. And it could state that maybe Bitcoin is going to slow down in its overall returns. That's something to keep an eye on over the next coming weeks and months. I've already said that I think Ethereum will outperform Bitcoin over the next 2 months. It's probably not a very difficult call to make. That's just traditionally what happened in the data statistics. But remember, everybody's looking at Bitcoin right now and they forget about the other coins. And that's why we've started to see the pickup of those over the last kind of 48 hours particularly. Let's now have a look at the treasuries and the big transaction. I just wanted to show you here, this huge transaction came through. Of course, we'd seen a lot of accumulation before that. And what has been the result? Well, treasuries have flown up. Now, the reason I want to say this is it's not a surefire thing, but we put the evidence together and we start to see the technical flows. And of course, we ignored the news and the press and the storylines about how bad treasuries were and how they were all going to explode and everything else, because we started to see flows coming in. Well, it turns out we just saw a monstrous trade in a 2 times leveraged NVIDIA position. Now, this is a very strong put wall level, which we'll look at in a moment for NVIDIA. And we've just seen the second largest transaction. So that's the 6th largest transaction, the second. And back when we saw the first, it actually went bearish. And of course, we need to now see this level hold. The good sign is the technicals look a little bit more bullish than bearish at this point. But of course, if we take a new low, that's not going to be so good for NVIDIA. So it's to be determined how it looks, but I guess you'd have to say it's probably more bullish than bearish at this stage based on the options flow. For the week ahead, we've got quite a lot of different earnings. Obviously not the big ones anymore. We've seen those, but some big tech still, some of the hypergrowth stocks, and quite a few things to look at. In terms of news ahead, the big thing is going to be the non-farm payrolls. We'll be doing an in-depth report on that because I think non-farm payrolls is now the most important number to the US, and it looks like they're playing even more funny buggers when it comes to the numbers. Yes, the numbers look really weird and bad in some ways. So we'll be doing a deep dive into the jobs numbers to show you what it really is versus what everybody else is talking about. Let's now go through the S&P 500. Advanced decline line was up in the week. That's a great sign. Flow, of course, currently is quite bullish. And we've seen positive gamma as the market closes above 6,000 on the weekly for the very first time ever. We wouldn't want to be bearish against this market at this stage. A series of higher highs and higher lows is very bullish. Volume did drop off a little bit, but that's traditional around Thanksgiving. And while the next week may statistically be negative, I think overall things are still very positive on these markets. Let's have a look at the futures and see whether it's the same kind of story. It certainly is. The market is obviously rallying up and it's managing to make a series of higher highs and higher lows as we've mentioned. The big thing is here, even if we get a pullback, there's going to be quite a lot of buying pressure. And we're looking at things such as the daily 20 moving average, anchored VWAPs, and a few other things to break down levels. These are the key options markets for the Monday flow, but I think the Tuesday could be the most interesting session. Take a look at this. We are in positive gamma. The options market is moving up higher and higher and higher. 60-40 now, the major call wall. But then all of a sudden, on the Tuesday, you can see here, we get this 6,000 call wall. Could that force the market back down into like a 59.50 and maybe cause that little bit of a ruckus that we usually see post-Thanksgiving? It's certainly possible, and of course we'll keep on look on that. That's more of a guess though, so usually you would just want to be generally bullish. I think it's pretty clear that the overall call flow is very, very strong into the end of the year, and people are playing those stats because guess what? The market wants its bonuses this year, and to get bonuses, they usually need to bank some profits. And of course, they're loving these new all-time highs on the street. Let's talk about NVIDIA. We saw a massive dark pool transaction. We also know that we have a huge put floor for the week ahead, 135, 134. That bodes well if we can hold the price. And the key is to hold the price. We do not want to see a closure underneath 134. That could create what we call a cascade effect. And of course, we turn into negative gamma flow. but this is a good put floor. And of course, it can be timed with the market, with what we've seen in the dark pools, to hopefully show us that maybe Nvidia will go back to leading once again. On Tesla, tons of puts across the board underneath around 340. We're trading at 332. This could be boding okay for Tesla, obviously, if the market can quickly get above these areas. But we'll notice here that 360 overwhelmingly becomes a huge call wall in the future. So that's going to be the level we want to break, 350, 360. We get past that, well, we have a new target, guys. 400, 400, 400. This is the big area that everyone's looking for post 360. So if we get through 360, 350, we're going to look for 400. It's going to be a gravitation magnet at that stage. And there could be a good trade coming up on the horizon if you're a momentum trader. So just before we jump into the charts and we take a look at all of the key levels that you need to be watching right now, I want to say a big thank you to the sponsor of today's video, which is obviously Tiger Brokers. Now, not only have Tiger Brokers been around for 10 years, but they're offering extra specials for the audience out there. Look at the links in the description down below if you're from one of the countries where Tiger are at. But for the Australians out there, remember there are extra bonuses that I've managed to get sorted for you. Tiger Broker's been winning a lot of awards over the last couple of years, which is really awesome. And one of the things that I really like, especially for Australians, is that we can finally target American stocks within hours that make sense to us. For anyone that doesn't know, Australia is in the middle of nowhere. And of course, we're down under. So we are backwards in time. And therefore, to get access to the best market in the world can be difficult unless you're like me and you stay up really late and then get up really early. Well, now 24 by 5, you can trade 9,500 plus stocks and ETFs. That's a huge deal. You can transfer on the fly to get into the currencies you need. And obviously, they're always adding new features. One of my favorite new features at the moment has been the AI investing companion, which is inside the app. Basically, it takes all of their extra premium news feeds and quickly summarizes it for you into a snippet. This saves you time, and time, as you guys know, is money. So what are you waiting for? Check them out in the links in the description down below and see if they're right for you. All right, guys, let's break it down now into the charts and see what's happening. First up, US 10-year dropped off. This is a great sign and something we've been looking for that Treasuries trade. More importantly, it also helps small caps, and of course, it has really led into everything we've been talking about. This was the major concern over the last couple of weeks, and we didn't think it was going to break it out, but it was always something we were looking at. Now, this has led into Treasuries actually performing pretty well and closing above 93.25. Nice work, Treasuries. So now they've closed above a new high. They've also closed above the 20 moving average. And of course, at this stage, you'd have to think pullbacks might be met by bull demand. So it's a good sign for Treasuries out there. And we first start to see this with, of course, our accumulation and dark pool trade activity. Remember, down here, what were we seeing? Everybody from Druckenmiller to others, oh, Treasury's going to explode. It's the worst ever. We're short selling it. Yeah, talk about you trying to use us as exit liquidity. Thank you very much, guys. That's what we don't want to be here on the channel. Let's now talk about the American consumer, generally still relatively strong, which is a good sign. And coming into Black Friday, I'm sure it'll be one of those records that we always see, whether that's real or not. And of course, home builders still managed to hold on to its gains from the previous week or this week, but it did end up having an inside kind of bunch of candles, which is interesting and worth noting. The US dollar fell down. Now, that's interesting in itself because I saw so many news articles saying the dollar was going to go bullish forever. But it hasn't ended yet. Remember, this is exactly where you would generally see a buyer for the dollar. And this week is jobs numbers. And jobs numbers will be the linchpin for the US dollar. Remember, if the US dollar breaks down, it's going to be good for things like the HSI, the Chinese markets, as their easier stimulus package kind of path could be, coming through. And we also may see metals start to fly as well. But this is a very important point for the US dollar. And if it drops this area, then we'd have to think rallies are going to be met by sell demand and markets these particular US dollar could go down. That could be okay for the stock market. Now let's move over to gold. Pretty good signs. Gold finding that first bull zone. Bit of replication in here from our day trading masterclass, which is awesome. And so far, so good for gold. But I think where the more important story lies is in silver. It tried to do a comeback here. So it's managed to break back above here and obviously dealing with this supply, making a slightly higher high. I would have preferred it actually closed above this zone or actually found further strength here before pulling back. But this is a good first sign for silver traders. Obviously a little nasty down here how silver traded. But yeah, could be good. And I think this is one that a few people were getting into last week and saying, you know what, I'm liking silver. It was a strong Friday for the silver markets, but we do want to continuously see strength next week. Let's take a look at the weekly candle here. And you'll notice it comes off with a big wick. I do like that. Big wick, good. Trend line, still intact. All right, let's see what we can do. Let's see if silver comes back. US oil, this is just, I've said this for a while. It's just geopolitical tensions, all sorts of nasty politics. It is really tough trade unless you're just going up, down, all around in terms of scalping each way. Some of you guys will say oil's easy. I think oil looks like crap on the charts at the moment in terms of up, down. Yeah, you could say, well, I'm just going to buy 67 and sell somewhere around 71. For now, that is the strategy as we're trapped within the zones. But this is just like doji, bit of rejection down. Very difficult to say whether this is actually dumping or not at this stage. So we'll come back to oil when it's necessary to do so. Tesla held its own and obviously came back to 345, which is pretty cool. And as we know, we've got a lot of puts underneath that. So at this stage, Tesla's still looking good. Break of 360 is going to bring 400, and that's going to get us to that almost all-time high. Remember, Elon's still a big winner of this election, and at this stage, things look good. Nvidia also got a massive dark pool transaction on it. 135, as we mentioned last week, looked like a put wall. It still is. Big transaction there. Very interesting on a 2x levered fund. Looks kind of good on the TA. Obviously, would want a 140 plus if possible, just to kind of get that flow to a new higher high. But what do you guys think? Is this a buy for Nvidia? Do you think these guys are getting in long, or are they trying to dump off some positions before it dumps? I don't know. It kind of looks decent to me. Let's move over to HSI. No new high, okay, but obviously some life in the Chinese markets again. We're looking for that dollar to break below. But we're going to watch copper as well and iron ore. Iron ore doing some good numbers. Copper obviously not able to break through 418. We will check that. And if you have a look at iron ore, we'll just use iron ore spot here. We could also use futures. You'll notice it is still climbing up there. So yeah, not the most negative sign you've ever seen for the Chinese stock market. Another one that's doing quite well has been the Aussie market, as we reported a few weeks ago. Super bullish, the Aussie. The Aussie looked awesome on the charts. That is full replication from our day trading masterclass. That's a beautiful trade, honestly, guys. And this thing is going up pretty strong. A lot of people talking about 8,400 being a thing. I don't think it's a thing. We are at a point where it might consolidate a little bit here, but realistically, the market looks strong. And that's because we're seeing a bit of a resurgence in the metals. Even some of the energy stocks have been improving a little bit, regardless of oil going up, down, all around. And that's a good thing for the economy in, of course, Australia. Also, healthcare starting to look a bit better as well. US 2K, just chilling at these highs. Very nice returns, one of the better returners for the month of November. In fact, if we go to the 1st of November to now, 11.49%. So actually beating out the rest of the market indices. And that's awesome because that's the kind of market we were hoping for, and it has continued. MDY also finding quite a lot of buyers and, of course, just chilling up here at the highs. If this gaps down, it could show you that mid-cap's having a little bit of a pullback. But remember, it's a series of higher highs and higher lows. A little sell-off here is not going to change that trend, and it is still bullish for now. Let's have a look at the NASDAQ. The NASDAQ still kind of making a little bit of catch-up gains. We just haven't seen the strength in the Mag 7 over the last kind of, I would say, 4 or 5 months, and that's to be expected. Rotations moved into small caps and mids from Wall Street, which we've been looking at. And some of the best kind of stocks at the moment in terms of when you're looking at the charts, funnily enough, Apple really trying to put the pressure on making these all-time highs. I guess it might have just done so, but we did have a look at this one last week. It looks quite interesting in terms of the strength coming out of that chart. Now let's move over to crypto. Ethereum still faring very nicely versus Bitcoin with the FBTC ratio. And of course, we've seen Ethereum put a lot of pressure on this top-end trend line. Now that kind of reminds me a lot of 2020 Bitcoin, which we shared in the last one in terms of the overall setup. And if we breach through this area, maybe Ethereum's going to really start to go wild. And this is leading into quite a lot of movement in the alts. You may have noticed over the last 2 days, some of the good, better quality alts, or at least the more well-known alts, have started to run again. And it might be happening sooner. We already know Ethereum has good Decembers through to Mays, theoretically. Again, I wouldn't put too much on that. Look at the price action. But things have been coming through, and we saw those large transactions. I wouldn't bet against Ether. I wouldn't be short this thing personally. I think the market looks relatively strong. So let's see whether Ethereum can start to do very nicely. Now, what about Bitcoin? Well, I would think it's in a pullback in time. That is that it's going to go up, down, and all around as it consolidates after what was a monumental move. Now, it makes some sense when you look at MSTR, which obviously is coupled in many ways to Bitcoin, and that had a big sell-off on it. It kind of tells me the hype was real. Everyone's in Bitcoin. I love Bitcoin. I think it'll go higher in the ultimate term, but you've just got to kind of think about this and say, well, wait a second, is this now a teller that maybe rotation is occurring? For now, I would say that Bitcoin is just kind of holding between that 80 to 100K zone. We break 100, obviously it's going to get some momentum on it, possibly put 10,000 on relatively quickly. But yeah, it's just kind of holding. And for now, the kind of base of MSTR is somewhere around 320 to 350, which is what we mentioned the other day. For the news week ahead, there's a little bit of news. ISM manufacturing PMI, 10 a.m. And if we scroll down, these are all New York Times, by the way, we've got the non-farm employments and the PMI here. Fed Chair Powell annoying us at 1:45 p.m. on Wednesday, December the 4th. That'll be interesting. Why is he coming out? What's he going to talk about with the jobs report coming? And then the big one. We need to look at these jobs reports because, of course, we're going to see some very interesting numbers. Unemployment rate possibly spiking up. Will we see these types of jobs numbers? Are we going to see revisions that are always dodgy? Well, I would say there's a lot to unpack, and we're going to look at that in detail as we see non-farm payrolls come through. Guys, if you enjoyed today's video, remember to subscribe. Check out, of course, our Black Friday sale if you're interested in finding out more about replication. I'd have to recommend the Day Trading Masterclass and Advanced class if you've been watching these videos and you want to start doing some of the things we talk about. And of course, check us out on X. And reminder, if you haven't already and you're from Australia, check out Tiger Brokers. Links in the description down below. There are some other countries as well, and they're always adding new features. One of my favorite features, Forward PE. Have a look at it on the US stocks in the mobile app. It's pretty cool. All right, catch you for now. Bye, guys.